Welcome back. The market is closed and the numbers are in. The PSE index pared some of its losses to close at 6,300 level, but still down 2%. All sub-indices are in the red, led by mining and oil, which slumped more than 2%. Value turnover reached 8 billion or 8.7 billion pesos. Let's get more in the markets now by bringing in Wendy Estacio-Cruz, the head of research at Unicapital Securities. Wendy, good afternoon.
Hi, Stanley. Good afternoon.
All right. Those are the numbers today at 2.13% down. Our market back in the 6,300 level. What's your analysis of the movement, the closing figures in today's trade, and what factors perhaps played into business decisions today?
Yeah, if you look at the Asian markets, these were sold off sharply due to the escalating conflict involving Iran. And that pushed the oil prices higher and, of course, triggered global risk aversion. PSEI is down 2% today, and I believe this is because we are a net importer of oil. We rely heavily on imports. Roughly 80 to 90% of our oil comes from the Middle Eastern producers like Saudi Arabia, UAE, and Iraq. So I think that's one of the key reasons why PSEI was down. And of course, some of the emerging markets such as South Korea is also down 13 to 14% and being hit the hardest. And that's because it's also one of the key importers of oil, as well as the exposure in tech. So I think that those are the reasons.
And being an oil importer, of course, affects everything regardless of sectors. We've seen how red most, if not all, of our sectors today. But which do you think is most affected by the developments in the Middle East? What particular sector or counter?
Yeah, I think aside from the energy sector and aviation, one thing to note is that the shipping business is also one of the sectors that will be affected. For example, stocks like ICT is also affected because of its exposure in the Middle East, so in Basra. So I think this is one of the key sectors that should be that we should watch out for.
Okay, you know, there are fears, apprehensions of investors. If this war prolongs, of course, it could affect inflation and many other things in the Philippines in particular. What's your outlook now for, say, currency in the short term, as, you know, everything's reacting to the geopolitical developments, which does not look like it's ending anytime soon?
Yeah, as mentioned, given that our country is a net oil importer, higher global oil prices could really affect our currency. Right. And of course, other currencies against the US dollar. So there might be a flight to safety going forward. So in the short term, we see some pressure on the Philippine peso, and as we await for further clarity on when these tensions end in the near term.
And, you know, Wendy, how deep dip are we seeing, and how concerned are you over short-term inflationary shocks as a result of the conflict?
Yeah, well, we are hopeful that this should be done at least in a week. But for perspective, during the Russia-Ukraine war, which began in Feb 2022, the surge in global oil and food prices pushed the Philippine inflation sharply higher, peaking at around 8% in late 2022. So that's roughly a year when we saw inflation gradually inching up and then peak at 8%. And in response, we saw the BSP also raise the interest rates by a total of 350 basis points over the past year in 2022. So I think if that kind of tensions continue to happen right now, so that can also transmit into some inflationary pressure to import-dependent countries like the Philippines.
Okay, and we're seeing government doing something about this. What is your view now of these efforts to ease the impacts of impending inflationary pressures? In particular, the president is in fact asking for special powers to ease or remove excise taxes. While this is ongoing, there are also other efforts by other government agencies to cushion the impact of inflation as a result of the conflict. What do you think about these measures?
Yeah, I believe that should help really support or cushion the impact on our inflation. Right now, we're still expecting inflation to remain benign, but with the impact or the likelihood of this the potential increase in oil prices, I think the government may focus on some like subsidies or efforts to stabilize food and fuel supply going forward. So that should also help the government when it comes to these kinds of global pressures.
Lastly, Wendy, what is your guidance now? What guidance are you giving to investors who are experiencing perhaps jitters in this market as of this moment? What's the best approach? What's the best attitude towards investing under uncertain conditions like this one?
Yeah, one thing to note, Stanley, is that the PSCI is still one of the underperformers. I mean, over the past year, we underperformed the peers. We're actually the cheapest, and I believe with the current, even with the current environment, we're expecting earnings growth of double-digit for this year, and I believe the valuation gap suggests a possible rotation into emerging markets such as the Philippines. So I think investors should stay diversified and focus on fundamentally strong stocks, mainly selective stocks, and maintain a long-term perspective going forward.
All right. On that note, Wendy Estacio-Cruz, Head of Research of Unicapital Securities Incorporated. Thank you so much for joining us this afternoon.
Thank you, Stanley.
Have a great day.